It's a big push for Bharat as Finance Minister Arun Jaitley steps up investments in rural and social sectors. The government's credibility gets a big boost as the FM sticks to the fiscal deficit targets for FY 16-17.
Good evening and a very warm welcome to ET Now. It's a very special day. The union budget has been announced and quite a few reforms have been announced, Avan.
Absolutely. So let's just walk our viewers through all of the top headlines then. Have earned more, spent more and not given away anything on the fiscal deficit front. That's the word from Arun Jaitley in his first interview after presenting his second full-term budget. The FM says any revenue boost will help consolidate the fisc.
It's a day of high volatility on the Lal Street. Sensex sheds over 150 points, even as hopes of rate cut emerge amidst wild swings.
A bit of a disappointment for state-run banks. Finance Minister pegs the PSU bank recapitalization for FY 17 at 25,000 crore rupees. Banking stocks, however, rally on hopes of an interest rate cut by the RBI.
The ghost of retro tax is finally buried. Finance Minister Arun Jaitley says there will be no new retrospective tax. Also announces a one-time settlement window for all pending cases.
A setback for auto companies and cigarette makers. The FM imposes a new levy on petrol and diesel cars ranging from 1% to 4%. A big hit for ITC as the duty on tobacco products is hiked up by 15%.
It's a big push for startups. Jaitley declares a 3-year tax holiday for new gen enterprises. Also reduces the lock-in for capital gains tax relief to 2 years from the earlier 3 years.
India Inc. gives a big thumbs up as the Finance Minister walks the talk on fiscal consolidation. In an exclusive chat with ET Now, Bharti Airtel Chief Sunil Mittal says the move will boost India's credibility and also says that higher rural outlay will help pump prime economy.
Okay, let's hear out what Finance Minister has for the union budget and his rationale for the budget that he presented today.
Global growth has slowed down from 3.4% in 2014 to 3.1% in 2015. Financial markets have been battered and global trade has contracted. Amidst all these global headwinds, the Indian economy has held its ground firmly. My budget proposals are therefore built on this transformative agenda with 9 different pillars. They include 1. Agriculture and farmers' welfare with a focus on doubling farmers' income in 5 years. 2. Rural sector with emphasis on rural employment and infrastructure. 3. Social sector including healthcare to cover all the under welfare and health services. 4. Educational skills and job creation to make India a knowledge-based and productive society. 5. Infrastructure and investment to enhance efficiency and quality of life. 6. Financial sector reforms to bring transparency and stability. 7. Governance and ease of doing business to enable people to realize their full potential. Fiscal discipline, prudent management of government
finance commission period. And perhaps we must look at the fact that do we have to really anchor on the fiscal deficit target, or we look at a range, or maybe some other way of thinking at this thing. But prudence in government expenditure is something very fundamental. And I must say that even just now, the finance minister also mentioned that we'll stick to the 3.5. We can do it. In the meantime, this committee of experts will have a look at it, and we'll, I mean, they'll advise us. And I think Arvind can perhaps
actually, I might have another thing. The thing is that, you know, you need to review this for completely independent reasons. You know, we need a medium-term expenditure framework. The medium-term revenue projections have been overtaken by events, and all around the world, you know, what fiscal anchors should be. They've undergone revision. You know, what the anchor should be, how much scope for counter-cyclical policy. And the point, I think, is that had we asked for a review and not stuck to it, people would have said, oh, you're reviewing it because you don't want to stick to it. Now we say we're sticking to it and then we review. So then there's no doubt about the commitment to review.
Previous governments never had such compunctions. They just did whatever they wanted to do with the FRBM goals, and nobody ever talked about a review.
So now we're saying that, we want to look at it afresh and try and, make something meaningful so that we can do something credible and be honor in the observance than the breach.
And may I just add, you see, you have to also see the fact that even the 14th Finance Commission, it's worked out certain recommendations which are based, the underlying thing is the FRBM Act. They are the states which are following also this, their fiscal consolidation programs. You can't just overnight say, I'll do it this way or that way. I mean, it has to be an adjustment process. You can't just tell me today that you have to drive on the right side of the road. I mean, I have to, I have to get a car which has a right-hand drive and things like that. So it takes time.
So
and what
overall, the budget seems to have received good reaction. Clearly, there is an attempt to overhaul the tax administration, and it's a great start. I've never seen budgets with so many tax proposals. Two things that people felt let down a little bit. One was that no definitive roadmap on divestment. Of course, there was issues on bank capitalization. Second is conspicuous absence of GST. We all know why GST is stuck because of constitutional amendment. But then how does it signify this government's seriousness to move ahead with the GST? And GST did really stick out. And
no, on the GST, I think the commitment of the government is completely unchanged. And what the FM has said also is that in this legislative session, we're going to try and see to get the bill through, and then all the follow-up steps will be taken. And in the speech as well, he said this is one of the top priorities. So, I mean, there's nothing in the budget that could be done, to push forward that. That's going to come as part of that. So, I don't think that's
the direction of CST rates. You think you couldn't have looked at taking away the central sales tax? Take away the central sales tax to signal the GST.
See, look, the thing is that all these are a matter of balance, right? You need revenue because we're going to stick to the deficit target, and you want to balance everything. So, if you took away the CST, you'd have had to find some other source of revenue. And then when you impose a cess, people say, but you're imposing a cess. So it's kind of a balancing act that you have to do. And I think there is the commitment to try and get the GST through is unwavering.
And divestment?
On divestment, we have announced that we're going to have a divestment target. I mean, and I think this time it's going to be, the fact that the name has been changed is more than symbolic. I mean, the point is that I think the aim is to come up with a proper framework, a policy framework that will sustain, a speedier disinvestment going forward.
What makes you so optimistic that you're going to do any better this year than in the previous year? I mean, disinvestment has been a disaster. Successive governments have never met their targets. So rather than tone down and looking particularly at the problems in strategic disinvestment, the government's ambitions seem very unrealistic.
No, number one, I would say that the track record of this government in terms of disinvestment in the last 2 years has been very good. Last year, this year there was a problem. I mean, there was this thing about 60,000 was the target. We couldn't achieve it, but then there were certain market conditions and then
beginning of the year the market was quite okay.
And this year also what we are targeting is about 56 or 57,000 crores, and that also is being divided into certain things which will be strategic disinvestments in which the framework has been worked out, and the Niti Aayog will be piloting that. And rest of it will be normal divestment which takes place. And again, we'll have to look at market conditions in the sense, you see, when you do a budget exercise, you make a plan for the future. There could be changes, there could be these variables which we have to react to, and we do.
Why you should have a conservative budget. When you're estimating revenues, you're conservative. When you're estimating expenses, perhaps you tend to be a little optimistic, because revenues by nature tend to be less, and expenditure by nature tend to be more. That's any household budget is always a cushion. Whereas the government of India, I think the cushion is always on the negative side. You overestimate revenues, you underestimate expenditure.
You're right that we'll have to see, but I think what is different this time is, I think a policy framework to sustain strategic disinvestments is now in place and being done. And that's
what is that policy framework?
It's being discussed.
I believe it's been uploaded also on the, you'll have to have a look at it. That's what the Secretary told me. It's being uploaded on the website. I mean, it's just come out of the department. Okay. I mean, I'll also have to look at it, but basically they've decided that the Niti will have look at all that and work out how basically our assets of the government are managed better.
On projections for tax collection, all forms of direct and indirect taxes, you're projecting between 10 to 12%. But I just noticed that you are projecting a robust collection on personal income tax and customs duty far in excess of 15% more than the average. Is there any underlying philosophy why you believe you will be able to collect more customs duty and personal taxes?
No, personal income tax, I think it's 18% growth.
That's
because of this the disclosure scheme. So I think it's expected that the disclosure scheme...
How much have you factored in for the disclosure scheme?
I mean, the amounts, I think, I can't give you all the details,
Sure.
but, you know, the fact that it's not close to GDP growth and beyond, it has a logic to it, which
Sure.
is that we're going to have, normally what happens is that you generally say buoyancy is close to 1 or a little bit above, your revenues are around GDP growth, unless you have extra measures. In this case, the extra measures are the voluntary disclosure scheme, and that's what's going to give you that.
On the customs also, you're projecting an aggressive growth rate, which is not really reflecting in the excise duty and the service tax collection. I mean, it seems to me it's 15+% on the customs side.
Well, see, I think customs, that is because, one expects a rebound in imports going forward, I think, as the economy picks up. And also, there may be some, whatever exchange rate changes that are factored in.
Sure.
So I think that's, because overall, indirect tax revenues, our collections have been, I think, estimated very, very reasonably.
Mr. Butani, you also said, your capital expenditure is 12% of GDP in the current fiscal.
12% was of the expenditure, or GDP it comes to about 2 point.
Yeah, and you said it's going to be roughly the same.
Yeah,
but I would have thought today, in today's scenario, there's a case for increasing that. So should one not have targeted some kind of higher expenditure on capital outlays?
Actually, I think we'll get into that framework next year when we start looking at our accounts from a purely capital and revenue points of view. Today, it's a bit mixed up with this plan, non-plan. A lot of stuff which is actually revenue expenditure is embedded in the plan side. A lot of expenditure which we call non-plan and which people take it to be bad expenditure actually has a lot of development things going on. In fact, a lot of social security schemes, let's say subsidies on food, etc., are really embedded on the non-plan side. So I think once this distinction is made, I think our targeting on capital will improve. I mean, we started looking at this very closely in the last year, and it's paid dividends.
I think the one thing on the capital expenditure I want to point out is that if you look at both the direct and indirect support for capital expenditure, it's much greater than the headline number shows, because in fact the government is supporting a lot of infrastructure for the railways and roads via bonds, and the government will be sharing that burden. So the headline number doesn't catch the total support for infrastructure.
For example, in the railways, the budgetary support is about 45,000 crores. The rest of it is coming from these other external sources. Similarly, on the road side, I think the budget would be about 50-55. The balance of it is coming really from, again, the bonds in which we'll be putting in money.
The debate on reduction in corporate tax rates and phasing out of exemptions seems to be half delivered. So you have pressed the button insofar as phasing out of tax exemption is concerned, except for giving benefits to SEZs by extending the deadline from April 17 to April 20. But most people felt that the budget should have ideally announced a roadmap even for reduction. So the reduction that you have made from 30 to 29% applies only to small and medium enterprises. So, the question was that, what is the plan? Does the government stand by its commitment that was made last year on reduction of corporate tax rate, or is there any rethinking?
So I would say that, it's true that we've recalibrated a little bit that 30 to 29, but there are actually two measures. You've only mentioned one. The medium scale enterprise goes from 30 to 29.
The new industry.
And then for the new
25%.
It goes straight to 25%. And remember, there's a logic to that. See, the logic I think that needs to be explained is that if a company is availing itself of exemptions, right, then it has a particular tax rate. But If you don't avail yourself of exemptions, which is what the new ones are going to, because they can't then you immediately get the 25%. So in a sense, even for the old companies, once they sort of stop availing themselves of exemptions, they would also over time move to the 25. So that in a sense, actually, it's a level playing field between the existing firms who have access to exemptions, who pay the higher rate, but then they get the exemptions, and the new guys, they don't get the exemptions, but then they get the 25% corporate tax rate. Okay. So there is a logic to this built into this.
As far as you made a proposal that the Reserve Bank should try and support recapitalization of banks by running down their equity capital. What has been the response from the RBI to that?
I mean, see, look, this is something that we will discuss. See, I've said very clearly that the government has a strategy for the banks, right? And I think we're going to see how it works. There's the RBI is doing the asset quality review. We've put in money on the Indradhanush, and the government, FM has said clearly, if we need more money, we'll put in more money. So we'll see how the strategy works, and and then reevaluate as we go on. If it's working, we continue. If we think it could be done better, we reevaluate at that point, and then then everything's on the table.
Mr. Wattle, last year's budget there was one overarching idea, which was for public investment, so you ease the fiscal deficit target. This budget, I find that there's no overarching idea. It seems like a hodgepodge of schemes put together with no firm single overarching idea. What is the single overarching idea?
I think the overarching idea is that the whole focus is on the agriculture sector, on rural employment, on rural development.
Every year.
No, it hasn't. I mean, this year there's been a 18% increase in our in the plan size. It's gone up from 4.7 to 5.5 lakh crores, which is a huge jump. It's never happened in the last, I think in the entire five-year plan, it has never happened like that.
But to the extent that agriculture is a state subject, how much of it are you really able to spend? Agriculture is a state subject, so how much are you able to spend?
I'll give you an example. I mean, for example, 20,000 crores is being going to be generated out of NABARD in a scheme. It's true that irrigation sector is really in the state areas. Now, the state governments are also strapped for money in this sector, and we can't support irrigation entirely out of budgetary sources. So you have to create money or money flows outside the budgetary system and pass it on to the states. And therefore this 20,000 crores over a period of time will work. I mean, one scheme which I'm trying to grapple with is the Polavaram scheme, which is a national project which might cost about 15,000 crores over a 7-8 year period in Andhra Pradesh. Now, how do you finance that? You can't do it entirely through the budget. Now, this will help in getting the money through. Everything need not be done through just budgetary support. It has to be done from outside also, and that's what we have planned.
But I will also add to what Ratan said on your question. Remember, two schemes which we know worked, even though are the Pradhan Mantri Gram Sadak Yojana. We know that works, and there the allocation has been really boosted. Second, NREGA, we know, in the last few months it's working, and we've given more allocation for that. Yeah, 38,000. So I think on those two schemes, it's not a question of just giving money and the states will do, because we know they have a track record, and in fact it's been to some extent resource constrained, and now we're providing the resource. So certainly, in addition to what Ratan said, those two schemes are, so coming back to your overarching idea, see, I think the overarching idea is the following. I mean, I'm making this up and Ratan may not agree. I think the overarching idea is that the world is a very difficult place. We have to be a bulwark of macro stability, while at the same time addressing the needs of certainly agriculture, which has had 4 successive seasons of things. So I think that's the overarching. You've got to remain rock solid while providing something for the sectors that have been badly affected.
Well, I do hope you succeed. Remaining rock solid is a very ambitious goal, but thank you so much, Arvind, as well as Mr. Wattle, for joining us.
Thank you very much. Thank you.
Okay, that was an interesting